Okay, before this video starts, I accidentally used my wrong mic, but the video is too good to not upload, so I'm uploading it anyway. I hope you enjoy this video, and my bad about the microphone, but let's jump straight into it. I dropped some real value in this video. This is going to be a full trade a day breakdown for today's price action, Thursday the 23rd of October. And oh my, I am going to be going into some in-depth price action and in-depth knowledge of what you should be looking for and what you should not be looking for when you are actually trading, especially when you are trading with inversion fair value gaps. Now, I first want to give a little lesson on how to use your stop loss properly, okay? I know this might sound a bit random, but a lot of people, I'm getting a few comments, I'm getting a lot more newer viewers recently, and a common question that I'm getting asked is, Louis, how do you use your stop loss? And it is very simple. So let's say that we entered into a long position right here from this candle, okay? Let's ignore why we enter. Let's just say we entered into a bullish position because we have this bullish candle close above this bearish fair value gap right here, correct? So I enter on the candle close. Now my stop loss when I am trading is only if I get a stop loss back below the inversion fair value gap that I entered from. So I will now only close this trade if I get a candle close back below this bearish fair value gap. What this allows me to do is not get stopped out on so many trades that will come down and wick most people out. As well as that, this allows me to get an extremely good trade entry whilst not ruining my risk to reward. Because how an average trader would enter this trade is they would enter here, but then they would put their stop loss at the swing low, okay? And that is, just look at the risk reward. Let's say we're targeting this high, it doesn't even make sense to take this trade anymore. But again, I will only get stopped out if there is a candle close below this fair value gap. Now question, Louis, what if we get a massive candle that looks something like this? Now you should always be using a maximum stop loss, especially when you are newer to using this model, okay? So if you're a newer trader using this model, then enter right here. Your maximum stop loss, let's say you set it around here, and if your risk wants to risk $250, set this as your $250, maybe a bit extra, $280 maximum loss, because this rarely gets hit. But you just want to make sure that you're entering into these higher quality trades, because of course, with this trading strategy, it has such a high win rate most of the time, especially with the good trade entries, you're not actually going to be in any drawdown. A lot of the time, you see a nice displacement candle, then the candle after that is also a nice candle going to your take profit. So that is how I personally use my stop loss and everything like that. Please let me know in the comments if you have any questions. Now, actually jumping into today's price action, let's of course start off with the daily time frame. Now, this was the daily chart that we were looking at going into today's price action. And as you can see, we have inversed this bullish fair value gap. So you might be saying, okay, Louis, we've inversed this daily bullish fair value gap. Obviously, your daily bias is going to be bearish. And the answer to this is no, not necessarily. The reason why I wasn't very strongly bearish today, I said it on my live stream. By the way, if you're serious about trading, click the link in my bio, get access to my live streams. You can literally watch me trade live this exact model that I'm teaching you for free. Just click the link in my bio, sign up, join the live streams, and I'll see you tomorrow in the streams. But yeah, even though with inverse bullish fair value gap, I wasn't necessarily 100% bearish. Oh, I just fixed my light. Reason number one, we are still extremely close to all-time highs. As well as that, oh, I hate when this happens. Trading view's been bugging for me recently. So yeah, we're still reacting from all-time highs. As well as that, if we actually were to look at the 4-hour time frame, we did not see this. Price action looks something like this. So this 4-hour time frame, yes, again, with inverse bullish fair value gap, we had this big string bullish candle back up. As well, we had this bearish fair value gap that was also mitigated. The main reason I just wasn't completely bearish right now, saying, okay, we definitely should come to the lows, partially because of the 1 hour. I think if we did get this inverse of this 1 hour fair value gap, that would have definitely meant everything was aligned and I would have liked the lows to be swept. Another reason is ES didn't inverse the bullish fair value gap, and of course, when we're trading, we would like Nasdaq and ES to be correlated, and just how bullish we have been recently, I just want some more confirmation. I want some more context. It's the same thing when I'm entering into a trade. The only thing that we have right now really on this daily time frame is literally an inversion fair value gap. We haven't really got a nice liquidity draw that is close. I mean, this next liquidity draw on the daily time frame is 632 points away. The chances that we come down and drop all the way that far is very, very low. So please, TradingView, sort this out. I'm trying to make a video here. So yeah, the main thing that I went off today was just the 1 hour. If we did get this candle close below this 1 hour bullish fair value gap, then I would have been a lot more bearish. And if we did get this candle close here, then that is when I would have definitely wanted these lows to get hit. Also, the same with this bearish fair value gap. So we created a bearish fair value gap right here. I said if this inverses, then we should come up for the highs. So that was kind of where my head was at with my daily bias today. Now, dropping to the lower time frame. So let's look at the price action. Straight away, we have these equal lows below. This was the pre-market move. We just shot straight up. So whenever we shoot straight up like this, the simple thing is you can't catch a trade. Oh, TradingView, you're making this difficult, aren't you? Yeah, the simple thing, whenever we shoot up so fast and so quickly like this, you just cannot catch a winning trade, unless there is obviously a trade to take. But in this instance, we literally just pumping up. There has not even been a bearish fair value gap. So during my whole stream, what I was saying is that really the only way that we're going to take a trade is if we get to a retracement, then of course create a bearish fair value gap and then look to enter from. So during the whole session, that is what we're kind of waiting for. We are still pumping up here, still pumping up. All we need is this nice bearish move down, and if we wait, we actually do get that. So yeah, right here, this is the first potential trade right here. So we actually come into an interesting position. So we get this little move down, and it's the same with short positions. If you're looking for shorts, when we pump up so much, you want some sort of move like this. You enter from this fair value gap, this is your entry, and then that is your stop loss break even point right there. And as you can see, that is the exact move that we have right here. We come down, come back up, create the bullish fair value gap. If we inverse that, we should go for this break even point. So I know a lot of people took this trade right here. The reason why I thought this was actually very interesting was not because what I can see right now, it's what happens straight after this. So we get this next candle. As you can see, we also create a bearish fair value gap. In this instance, we also had a bullish SMT in the market, and I said two things. I said two things. Either we inverse this bullish fair value gap and we should come for this low, or we inverse this bearish fair value gap and we should come for this high. The reason why I wasn't too keen on the shorts personally was because we already swept these lows on ES, but this next candle makes it very interesting because as you can see, this candle right here at 1018 actually comes up and respects 50% of this 1 minute fair value gap. And if you're a more advanced trader, you will know that when price action respects 50% of a fair value gap, it just gives a nicer reaction than tapping into the fair value gap overall. It was also an unmitigated fair value gap. So now that we tapped into the 50%, we got this candle close below, I was pretty confident that we would go for this low. The way that I would play this trade out, obviously enter on this candle close, stop loss above. My take profit would probably be here for a nice 1 to 2.3 risk to reward. You would just have to be extremely aggressive on your break-even point here. The reason being, as soon as we take this low, all of these fair value gaps to the left come into play. So you have to move your stop loss to break even right there. And yeah, that would have been a break-even trade. Still a decent entry, and then the actual trade happens straight after this. Now, we have this bearish fair value gap. Again, we have this very aggressive break-even point. We've came down, tapped into this bullish fair value gap. What is nice about this trade is we're very correlated with ES. So on this next candle close, we also candle closed on ES, inversing the same bearish fair value gap. We have this nice break-even point right here. The most important thing about this trade is this displacement candle. This type of candle is the exact candle that you are really looking for when you are entering into the trade. So the context here, in my opinion, is the daily time frame. looking like we really want to come up. We inverse that 1 hour fair value gap. We're displacing it like crazy. We've came down, tapped into this bullish fair value gap. We've inversed this singular 1 minute fair. No, actually, this was a 1 and a 2. Yeah, a 1 and a 2, but it inversed on the 1 minute and the 2 minute time frame. So this is where you enter. Remember, when you are trading, if there is a fair value gap on multiple time frames, ideally you want it only to be on the 1 minute, but if it is on, let's say, the 1 and the 2, you want it to inverse on the 1 and the 2 minute fair value gap on the 1 minute and the 2 minute time frame. This, of course, is your break-even point. Your take profit points are, well, your take profit point would be this high. We also had like a 1 hour unmitigated above or something like that. That's also a nice take profit point you could have targeted. And again, if you're being aggressive with your break-even, what I would recommend here, you probably would get stopped to break even and just avoid this choppiness. So I did take this trade, I did get stopped to break even. It ended up hitting the take profit. But you know, that's just trading. You're not going to win all the trades that you enter into. The main thing is that you're entering into the right trades. If you enjoyed this video, make sure, well, if you made it this far, comment below so I know who the real ones are actually grinding and watching these videos to the end. The link to my mentorship, if you want to join my private mentorship, message me on Instagram trading and I'll reply to you. And we'll get you in the private mentorship. This will really take on trading to the next level. Of course, the daily live streams link and my trading course is all in the bio. I hope you enjoyed this video. Let's go.